Welcome back to the channel, everybody. You know I had to do another video on MPW Medical Properties Trust because it's been all over the place lately. So we're going to go through, we're going to calculate how much you would make from the dividend if you owned $10,000 worth of shares. So if you invest 10K into MPW, how much money do you actually get every single year? We're going to calculate it. We're going to do a little dive into this company, talk about some of the new stuff that's been coming out, reasons why it's been going all over the place, and hopefully you find some value. If you do, hit the like and the subscribe button for me. That helps me out a bunch. And check out the actual calculation at the end of the video if you're interested. But first, we're going to start off with a couple of things. So let's jump straight into it. So we are going to look at their price appreciation, then the dividend history, the DRIP calculation. We're going to go to their website for the investor report for 2024, talk about some of their stuff with the main issues going on with this stock. And then we are going to do our full calculation to see how much money you would make from investing 10K into MPW. So starting off, up 8% the last 6 months, but it has been all over the place. I've been writing some options on this stock and it has been tough because it's just so volatile, but you get good premiums doing that. Now, if we look at the 1 year, down 36% on the last year. Now, this is why I'm very, very pumped for MPW. It has a lot to go back to. Now, even if you take, let's say, all the issues surrounding the company right now, and say you take 20% of their revenue from Steward, the problematic tenant they have right now, and you cut this by 20%, you'd still be looking at an $8 per share price. So that's not the best way to value these things. You want to value the cash, and there is a lot that goes into the selling and whatnot when it comes to these huge REITs, especially when it comes to medicine. But even at a 20% discount, if they lost Steward fully, they're still not looking too bad in my opinion. Now, I am biased. I own this stock already. It's been great for me. I'm up, I think, 38% or something like that. I bought it in the threes, and I've been holding it. And so I am biased. I do like it. And so just right off the bat, you should note that. It's down on the 5-year chart. In 2022, it was a near $25 stock. Well, $24. So it has seen a terrible, terrible drop. And I think it's going to have a nice climb once all the stuff with Steward gets figured out. So now we're going to jump into the dividend history and see how this thing's been paying out through this mess. One of the things with MPW that we know is that they had a dividend cut. So we saw this coming. It was fairly predicted. I didn't own this when it did cut its dividend. I had already sold. I hadn't purchased it yet, but after the drop, I was like, I need to get in on this, because of a lot of the factors that we'll talk about. We're going to talk about that in their investor report. So if you're really interested in owning this stock, wait until then, because that part will explain what's been going on if you're unaware. But there is a lot going on with this company. And so the dividend did cut from 29 cents to 15 cents. So they lost their years of consecutive dividends. And we can see it went from 29 cents to 15 cents. Does hurt, but it's not as bad as it could have been. And before that, they were pretty consistent with their dividends and with the growth. And so we can see right here, it did cut again. It cut in 2008, which we expect with the market, how it was then. But still, there's a lot to go on with this company. A 12.12% dividend yield, 60-cent annual for payout. Payout ratio is low right now. So for those of you that don't know, the payout ratio is how much of the company's revenue has to go towards paying out the dividend. So if a payout ratio is above 100%, that means the company is paying out more than they're making to keep the dividend. And we see dividend cuts when that happens. And this is important because they do have a lot of cash on hand right now, and they're waiting for everything to get figured out with the mess that's been going on. They pay quarterly. This is in the 1K dividend account challenge. When I first bought it, I did buy it before the dividend cut. When I first bought it, it dropped by like 50% or something. And we're back positive, which is absolutely wild because it is yielding quite a bit. So dividend safety is going to be an F because they just cut it. And their dividend cash payout ratio, I'm not sure how accurate this is. Sometimes Seeking Alpha is a little delayed, but their growth rate is going to be low. 4-year average dividend yield is at 9.6%. It's a lot higher right now. And AFFO, not too bad. I want to see, let's check their dividend growth. There it is. CAGR, 3 years, negative 5 years also negative because of that dividend cut. So they're going to have to restart. It's a full reset for the company, really, with everything that's been going on. But there is some hope. Now, this is a lot higher risk than a lot of people are willing to buy into, and I understand that. Do your own research. Let me know what you think in the comments, but this is not financial advice. So now let's check the drip calculator, and this one is crazy. So on dividendchannel.com, using their dividend tracker. So this tracks dividends and reinvestment. And we're going to do MPW versus the S&P 500. Now, this is crazy. So MPW was significantly ahead before all this turmoil with Steward Health. And a little bit of background on this. So MPW is a hospital REIT. It owns a bunch of hospitals, medical properties, Medical Properties Trust. And so what happened was COVID really took a lot out of this company. Hospitals were closing. It was a terrible time to be medical personnel. Staffing was difficult. Everything was going wrong. And so that caused a lot of issues for MPW. Now, we can see that currently, since 2025, if you invested $10K, you'd only have $19,000, which is still a pretty insane return of 92%. But over a 15, 20-year period, you should expect a little bit more than that. At least I do. Now, SPYI is up 520% in that same amount of time. But the key thing is, before the turmoil with Steward, this thing was at $60,000. So you were looking at a 60+% return, 62.5, roughly 62% return. And then it dropped. That's with dividends reinvested. When you don't reinvest the dividends, significantly worse than SPYI. The thing is, when you're looking at these stocks, it's smarter to reinvest the dividends depending on your scenario, because the power comes from the amount you get in dividends. So when you're looking at dividend investing versus growth investing, dividend investing, if you're reinvesting those dividends, it's very similar to growth because you're still growing the account. If you're looking for income, you just want money to pay your bills now, you can also do dividend investing, but you need more money to start. So everyone has their own thing. I like to find some room in the middle, but still this shows that SPYI did end up being the victor over MPW, but there's a lot more comeback potential for MPW in my opinion, whereas SPYI is at all-time highs. So some interesting stuff here. Let's jump onto their investor website. So this is I think it's their 2024 expectations, Q1. Yeah. 436 properties, 43,000 licensed beds, 9 countries, and 53 operators. Now we're going to jump into, let's see. Here is that report, the Q1 for 2024. And here's the issue right here. Steward Health. This is the company that has been causing all of the problems for MPW. It's a huge percent of their assets, 20%. So that's why I was talking about 20% earlier. 20% comes from Steward. And they just filed bankruptcy. So you're going to see MPW go like this. Boop, boop, boop. And you're going to see that for a while. Until it's solidified, until the Steward properties are sold off, until they are sold to other properties, until MPW drops them, it's going to be tough. Steward still owes MPW a bit of money. They have paid some back, I believe, and they're on the right track to pay the rest back. But still, it's going to be rocky for a little bit. Another thing that's totally changing MPW is there's one larger YouTuber who is pushing it to kill the short float. Because the short float is high. Last I checked, it was like 20-30%, which is really, really high. And so just like everything happened with GameStop, AMC, when they tried to destroy all the larger hedge funds that are pushing these companies down, they're doing the same thing with MPW. They're trying to rocket back and utilize the strengthened numbers of the retail investors to push MPW. So we've seen it had a couple, like today it was up 8% at one point, and then it trailed back down and ended, I think, up about 3 or 4%. And we've seen that a couple times, and we may continue to see that. And if the movement gets more strength to it, if more people decide, hey, I'm going to do this too, then it could be wild, and it could actually make a really big difference to MPW stock price. So pretty crazy. I wouldn't hate it at all if the stock price ran to $10 or anything like that, but I'm definitely interested in seeing what happens. So with Steward, the main problem until they get rid of all this, it's going to be tough. 25% of their total assets. So it's not just a small thing. That's why people are afraid. That's why the stock dropped at 70% in just a couple months. So there is a lot of fear still in the market, and we can expect a little bit more, but For me, I'm buying the dips. That's just how I've been playing it. Let me know what you guys think, again, down in the comments below. And let's jump into the calculation and see how much money you'd make from 10K invested in this dividend stock with a 12% dividend yield. Dividend.com, money invested 10K return rate, 12.12%, number of years 1. We're going to end with, not bad, year's return is $1,212 as we expected. And boom, let's jump it up to 5 years. After 5 years of your 10K invested, now this is not a realistic calculator just based off the fact that it's not putting in price appreciation. You can make more than this, you can make less than this. This is just based off the current yield. If they cut the yield again, this would be significantly less depending on how much they cut it by. So just a little notification for you there. Now, by the end of year 5, you are now making $2,000 every single year from just the dividends. Your total returns $7,700. Total money, $17,000. Let's jump to 10 years, not 110. Jump to 10 years. You're now making $3,300 every single year. So quarterly, you're making what? $900 something, a little more than that. Total returns $21,000. So let's find it. So at year 7, you have officially made more money than you invested. Year 6 is actually closer, which is a crazy step. So in six and a half years, your initial investment is now back. You're at 100% return just based off dividends. If this thing goes an average of 5% a year as well, you're going to be up another 30% on top of that, 30+%. So don't forget, but you could also be down. We'll jump to 20%. 20 years. After 20 years, you are now making $10,000 every single year in dividends. You are now making your initial investment back every single year in dividends, and you have made $88,000. Hopefully, you're investing in a tax-exempt brokerage account like a Roth IRA. I should say retirement account, not a brokerage, like a Roth IRA, so you're not going to lose 20K of that to the government, and you have $100,000 total off your 10K investment. You have now 10x'd your money. Wild. And just to top it off, let's say you're 25 now, you want to retire at 55 and you put 10K into MPW. Everything remained consistent. You now are 55. You're making $33,000 a year off of MPW. You have $300,000 in value if you needed to sell that to live off of. $309,000 total. So MPW's power comes from this strong dividend. If they can continue to grow it, that could be amazing. If they can keep it at the same rate, that would be amazing. They are at a 61% payout ratio, so they have the money to do it. So I'm very, very interested in seeing how this fund does. One last look at the numbers. In 30 years with 10K invested, you end with $309,000. I hope you guys enjoyed. Let me know what you think about MPW, and I hope I will see you in the next video. Don't forget to like and subscribe.